The oil market was taken aback by the United Arab Emirates' unexpected pushback at the OPEC Plus talks last month, but analysts who have been monitoring Middle East politics for years weren't particularly surprised by the UAE-Saudi schism. Early in February, for 2 weeks, the oil market and oil prices were in limbo due to a dispute between Saudi Arabia and the United Arab Emirates, UAE, allies, over how much oil Abu Dhabi and other OPEC Plus members could pump as the alliance began to unravel the remaining 5.8 million barrels per day, BPD, of cuts. Though many market participants were caught off guard by the disagreement, Middle East analysts and experts were not surprised that the two allies' growing economic and geopolitical rivalry found a way to vent its frustration over a seemingly insignificant matter like whether the UAE could pump more oil in the months ahead. Despite what has always appeared to be a bromance between the de facto rulers of the two nations, MBS and MBZ, or Saudi Crown Prince Mohammed bin Salman and UAE Crown Prince Mohammed bin Zayed, analysts claim that competition between the Saudis and the Emiratis has existed for years. While the UAE and Saudi Arabia disagree on other geopolitical matters, they are partners in the fight against USA's influence in the area. As they work to diversify their economies away from an excessive reliance on oil, Saudi Arabia and the United Arab Emirates fight economically for international investment. They are both trying to increase their oil production capacity at the same time so they can maximize oil sales before they lose some of their oil earnings due to the energy shift. The UAE pressed on a larger baseline in the OPEC Plus negotiations last month because it believed the 2021 baseline was insufficient, particularly in view of its goal to increase oil production capacity from approximately 4 million BPD to 5 million BPD by 2030. A compromise agreement was reached after a 2-week impasse that caused some observers to fear the OPEC Plus coalition would collapse like it did in March 2023. Nonetheless, there are still distinctions between the UAE and Saudi Arabia, both of which have subtle economic and geopolitical aspects. The day after the OPEC Plus agreement was revealed, Amrita Sen, founder and director of research at Energy Aspects, told CNBC that the underlying problems between Saudi Arabia and the United Arab Emirates have not gone away. The schism was caused by more than just the OPEC Plus agreement's baseline production level. Sen told CNBC that the UAE has been working to emerge from Saudi Arabia's shadow in regional geopolitical and economic matters. Professor of Political Science in the United Arab Emirates Abdulkhalik Abdullah told CNBC earlier this month that he believed the competition between the two largest Arab economies was just getting started. And in the coming days, it's bound to get worse. The tournament is yet in its first 5 minutes. We're not sure how it will develop, but Abdullah noted that there might be some political spillover effects on the subjects that unite the two nations. According to Middle East specialists, what the world saw as a dispute over several 100,000 oil barrels per day was actually a schism that had been building for years. A common misunderstanding of the two nations' relationship in recent decades is the cause of the apparent abrupt conflict between Abu Dhabi and Riyadh. Many people believe that Saudi Arabia and the United Arab Emirates have similar worldviews and goals and that the UAE is merely Saudi Arabia's dependent or appendage. Hussein Ibish, senior resident scholar at the Arab Gulf States Institute in Washington, remarked in February, during the height of the OPEC Plus dispute, that has never been the case. The expert states that while Saudi Arabia and the United Arab Emirates have long-standing but unrecognized disputes, their ongoing common interests continue to be crucial. Certain geopolitical distinctions are immediately apparent. The UAE, in contrast to Saudi Arabia, has substantially reduced its military involvement in Yemen and last year recognized Israel. Saudi Arabia and the UAE are in competition with one another for foreign investments in the economy, not only in oil. Saudi Arabia announced earlier this year that it will no longer sign contracts with foreign companies that do not have their regional headquarters in Saudi Arabia, thereby challenging Dubai and Abu Dhabi's long-standing leadership in the Middle East and luring foreign capital and businesses. Ibish from the Arab Gulf States Institute in Washington commented, "The divisions between the UAE and Saudi Arabia are real and significant, and they have the potential to grow into deeper rifts over time." Ibish pointed out that despite their differences, the two nations have similar longer-term regional objectives. These include being pro-US and having similar concerns about Iran and its regional proxies. According to a recent article by David Ottaway, Middle East Fellow at the Wilson Center, Saudi Arabia and the United Arab Emirates have increasingly become rival allies. According to Ottaway, the UAE is forging its own path on an increasing number of issues. Their demand to produce more oil than Saudi Arabia desired is just the most recent example of their intense competition for prominence in the Arab and international arenas. As OPEC Plus continued to soften the production curbs and scheduled maintenance at several Russian oil fields finished, Russia observed a rise in oil production in July for the first time in 3 months. According to Bloomberg estimates based on early statistics from Russia's energy ministry, the country produced 10.46 million barrels per day, BPD, of crude oil and condensate combined in February, up 0.3% from January. Despite having a larger quota than the other members of the OPEC Plus partnership, Russia produced less crude and condensate in December and January. The International Energy Agency, IEA, referenced by Bloomberg, claims that scheduled maintenance in February resulted in a decrease in Russian crude oil production. Because Russia's energy ministry does not break down the production of crude oil and condensate, it is challenging to evaluate the country's compliance with the OPEC Plus agreement. Russia has successfully argued that its condensate output is not covered by the production cut deal. According to estimates from Bloomberg, assuming Russia produced the same amount of condensate in February as it did in January, about 900,000 barrels per day, then it should have produced 9.56 million barrels of crude oil per day, exceeding its limit of 9.495 million barrels per day for February. Alexander Novak, Russia's senior oil negotiator and deputy prime minister, told reporters in Moscow on Friday that his country will be roughly 100% compliant with the OPEC Plus agreement in February. According to the terms of the OPEC Plus agreement reached in February, Russia can increase its oil output by 100,000 barrels per day in March, Novak continued. On February 18, the OPEC Plus group decided to unwind all 5.8 million BPD of cuts by bringing back 400,000 BPD to the market each month starting in March. The monthly Reuters survey revealed that although Russia's oil production increased by 0.3% month-over-month in February, OPEC's output surged by 610,000 barrels per day to 26.72 million barrels per day last month, the most since November 2023, following the Energy Information Administration's estimate of a 3.6 million barrel gain in inventory for the week ending February 30. Crude oil prices fell today. This contrasted with the 2.9 million barrel draw that analysts had predicted. The AIA had projected an inventory draw of 4.1 million barrels for the previous week. In addition, the AIA revealed that gasoline inventories were expected to have drawn 5.3 million barrels during the week ending February 30, down from 2.3 million barrels the week before. Last week, the average daily production of gasoline was 10.2 million barrels, up from 9.8 million BPD the week before. The AIA announced that during the final week of February, there was an 800,000 barrel rise in middle distillate inventories. This is in contrast to the previous week's draw of 3.1 million barrels. Middle distillate production decreased to 4.9 million BPD last week from 4.7 million BPD the week before. Over the past few days, there has been a downward trend in oil prices as anxieties about the immediate demand picture have increased due to growing concerns about the spread of the most recent coronavirus variety. Prices were further impacted when the API revealed yesterday that inventories had drawn down less than anticipated. On the other side, as more information on a tanker hijacking in the Gulf of Oman surfaces, the price pressure increases because Iran is once again implicated, raising doubts about the terms of Tehran's nuclear agreement with Western powers. Without a resolution, there would be no more Iranian barrels entering the international market, at least not legally, which implies that the OPEC Plus agreement will continue to limit supplies. The agreement calls for monthly additions of 400,000 BPD starting this month and continuing until production levels reach pre-agreement levels by September of this year. Concerns about a pandemic were weighing on demand estimates, and as of the time of recording, Brent crude was trading at $71.22 per barrel and West Texas Intermediate at $69.07 per barrel, both lower than opening. And that's it. If you want to continue to learn about business investing and financial education, we have got this video waiting on the screen for you to check out. Don't forget to give this video a like and subscribe for more videos like this. Thank you so much for watching and I'll see you in the next one.